Good evening, everybody. Hope everybody's having a nice summer evening. Yep, having a very pleasant time up here on the lake. It was actually up in the 80s today, so we could go in the water. Blue skies, blue water, fed the ducks. How does it get any better than that? I tried to get everybody to go skinny dipping, but nobody would have it. So, all right. Guess everybody's in. We'll get started. As we can see, ever since we had kind of the close below the T line, the Dow has not been able to put up any strength. The S&P 500 gap down below the T line. It hasn't been able to show any strength since then. And then the NASDAQ, which has been the strongest of all of them, was holding up pretty well today, but it still has the same scenario. We got a gap down below the T line. I would suspect we have to anticipate we're in a downtrend until we get down here to the 50-day moving average. It was almost warm there today. All right. All right. So interest rates still continue to go higher. Notice what the bond prices did. As soon as they did a shooting star, hit the 50, then gap down below the T line, that just still tells us this downtrending channel is still in progress. Interest rates could be going substantially higher. If this is wave one and this is kind of a rounding top resistance at the 50, wave three could be pretty big, meaning our interest rates go back up. The pink line we've thrown in here took off the 20 because the 20 isn't really all that substantial, and put on the 3T just to have it on here. All right, let's see what else we got. Sugar looks like a good short. Notice where it's kind of topped out, same level it topped out before. Doji, left-right combo, gap down. So this one you could probably be looking to go short on any weakness tomorrow. And soybeans has had a very good run. Notice the morning star, left-right combo, doji sandwich. Even though it got a little bit soggy on Friday, they took it up pretty hard today. Notice the gap up through the 200 tells us we're still in an uptrend until we see a sell signal. And the other one was corn. Also hit a bullish harami with a gap up through the T line, broke this downtrending channel. Would be very likely that they're going to come up and test the 50-day moving average. Gold, still in a very slow uptrend. Now this is where you start watching, or you don't have to watch, but you can see where the 3T is kind of acting as an influence. Silver, same scenario. Ever since it broke out with a doji gap up off the 50, we're in an uptrend. And the dollar isn't doing too much, kind of slow downtrend. The Japanese yen, kind of trading flat. British pound, still in a slow uptrend. You just have to hang on to this one. And what else do we have out there? I guess that's about it. All right. All right. Now, even though the market has been fading off, there's still some stocks that are doing decent chart patterns. NQ. S.NQ. Notice our big fry pan bottom, pull back, but they haven't been able to close this back below the T line. This one you want to continue to hold as long as it stays above the T line. This should be wave one, kind of wave two in here, even though it's junky. But as long as it stays above the T line, you want to stay with it. Also, look at our RPTP, also coming out of a fry pan bottom. And if you kind of observe what this one was doing coming out of a fry pan bottom, at the same time the market is going like this, just kind of adds some credibility to the fact that the investor sentiment is building up in these fry pan bottoms for a specific reason, and one of those specific reasons isn't the direction of the market. So anytime you see a fry pan bottom, you've got a much safer investment, in the sense that if the market's going the other way or has a big drop going the other way, you still have some upside potential in a fry pan bottom pattern. I would still suspect that this is going to have a good breakout, and if you drew a line right up through the tops here, I think you still have at least a move up to that level. We'll get to CONT. Well, I guess I can pull it up right now. CONT broke this fry pan bottom, and when it came back down and closed through the T line, which broke the trajectory of the fry pan bottom, you should have been back out of the trade. Let's see. All right. Now, what else do they have? Oh, so the fry pan bottom was showing up in RPTP. It's also starting to show up in RH, Restoration Hardware. So this one you want to keep an eye on, that if it starts coming back up, especially through the 50, which also would be breaking out through here, you probably got at least a decent move, approximately a 10% move back up to where the breakout would be. And then if it broke out, it could go much higher. SSYS was another one that people were looking at in the chat room, as long as this one stays above the T line. Notice where this started. 50 looks like it's acting as support. Then you have a hammer smack dab on the 50 with a gap up the next day. That pretty much tells you stay in this uptrend until you see a sell signal and a close back below the T line. Now, these slow curve breakouts, AMAP. Notice the slow curve, and when it got back up to the resistance level, look what it's done over the last 2 days. These slow curves you should be pretty high on your list. Just try to scan for these, or at least look for them eyeballishly, because when they break out, they're going to produce a good price move. And MPAL, also setting up with a slow curve type setup. Notice what we did today at Doji, which makes this very simple. On a positive open tomorrow, what are you going to have? Kind of a doji sandwich. If you have a doji sandwich, that means this thing is starting to pick up steam. And so on a doji sandwich breakout, it could be up 2 times or up the same magnitude, but this is the type of breakout that could get you really moving pretty strong. Let's see, I have got Netflix up here for some reason because it's staying up above the T line. May not necessarily be a great buy just yet, but if it kind of breaks out, acts positive, we little kind of cup and handle setup. And who else we got here? Who wrote that one? Oh, bigger position, Johnson & Johnson. Notice how this one is nicely pulled back. The morning star signal smack dab on the 50-day moving average. I'd keep an eye on this one. Now, I say I keep an eye on this one because if it breaks through from here to here, isn't that significant a percentage? Probably only 5%, but it could get there very quickly. So as far as an option play, if you can get 7 points out of a trade in a few days, get you right back up to this trend channel. It's not unusual to see a trend channel, a pullback, and then a gap up to get back up to that trend channel, and then afterwards you have a 45 degree. Oh, what's that one? KGOS. Same scenario. Notice what it did right here on the 50. And the reason they pull back to the 50 and find support is just kind of common sense. If you're an institution and you like this stock, you see it start pulling back, when are you going to buy? You're usually going to buy if it supports. So if there's no buying in here, then when they hit the 50, they start coming in. That usually means you're getting ready for the next wave to the upside. And we got Facebook. Facebook, J-hook type pattern. Doji, gap up. Doji, gap up. They open this positive. Your profit taking's over. Remember, they broke this out of a fry pan bottom, wave 1, wave 2. Look for wave 3 on the upside. And Rex, whoops, EXX, REXX, left-right combo. Get ready to be buying this one on positive trading, doing that little kind of flat, little scoop J-hook type pattern. You want to be buying this one on positive trading, just use the T-line as your stop. I had Zales on here from a couple of days ago. Wow. What have I done? Can't even read my own handwriting. Zales, that was gone. That's not, this one, I wouldn't short it because we really don't have a reversal signal when you're sitting on a support level. That one shouldn't be on this list at all. SCLN has pulled back. Now, it's pulled back to here, back below the 50. This is where I come in with the Fibonacci number. Again, I don't use Fibonacci's to make a decision to buy. I use the Fibonacci's to see if there's any important technical level where it's hit, and it looks like it's right now at the 62% retracement. Now at the 62% retracement, we've got a left-right combo. That gives me a little bit more incentive to decide that this is probably a good place to be buying. At least the Fibonacci people are starting to buy here. Yeah, that was Rex. And VIPs, another left-right combo. Same thing. I'd come up here, see if there's a Fibonacci number that is, this one looks like it came back to the 38% retracement area. Now it's closed right here on the, right at the T-line. If this opens positive, bounced off the 38 with a gap down doji, bullish left-right combo. Watch for your J-hook pattern to set up. And, yeah, Dang is one that we're still watching. Hold back. This starts curling back up. You've got your fry pan bottom, maybe a stronger J-hook than what we wanted, but it still looks like a J-hook potential setup. Now, RMTI was one that David L. pulled up today. That's got the bullish engulfing fry pan bottom. Wouldn't be afraid to be buying this one on positive trading using the halfway point of this candle, which would also be the 50-day moving average. And let's see. And then CASY. Notice where this is bouncing, right smack dab off the 50 with kind of a piercing signal. And OCM. Notice what I will use this for the demonstration of, notice the belt hold, bearish belt hold, continues the downtrend. Now we've got a bullish Harami with a doji gap up. Makes this very simple. If this opens positive tomorrow, doji sandwich, you're up above this T line. Look for the 50 to be your next target. If it breaks through, you might be starting a good run on this one. So this one I wouldn't be afraid to go after some of the calls on this one. Here's NVAX. This is only a $2 stock, had good volume though. But notice what it's done. It's gapped up, consolidated, and started back up above any of this resistance level. This one could be a good runner from this point. Now you're in a breakout territory. DECK, inverted hammer, inverted hammer, inverted hammer, bullish engulfing. If this opens positive, you want to be buying. Again, we kind of explained that this morning, that anytime you see an inverted hammer and it opens positive, the probabilities of it going up is probably close to 95% or greater. ZI, XI, morning star signal, inverted hammer, close right on the T line. Very strong buy if this opens positive. Where is it going to go to? You can draw a line up here on the top of the trend channel. Probably make a good, almost a 20% move to the upside. And PT also showing us that it's staying up above the T line. Kind of a wave. Notice what this one has done. Moved up, moved sideways, moved up, pulled back, moved up, moved sideways. This tells me we could have another good trend to the upside from here. Remember, the Japanese rice traders say, let the market tell you what the market is doing. Apparently that's moving up. This one, notice the J-hook pattern, the doji. After a gap up, if it opens positive, you're going to be breaking out through this area. This gap up starting the next wave should have another move, same as that type of move right there. BIOD. This one you can be buying. Notice how it keeps supporting right on this level, and it keeps widening. This move could come up to the top of that widening spread. ERJ, bullish engulfing, bullish candle, confirming the bullish engulfing, close above the T line. Look for the next move up here to the at least the 50. And XONE, same industry as DDD, also staying in this upward trend channel. Could possibly get back up to test the top of the trend channel. DDD came back down a little bit today, inverted hammer, but another one that if they open this positive, look for them to move to the top of the trend channel. If they ever break out through this level, that's going to have a very strong run to it. OPK, continue to hold this one. This one's coming out of this rounding bottom, breaking out through this level. This one should have some more upside potential. And OSUR. SCTY. Well, shuzbots. Hold on. Smoke them if you got them. Gonna have to wait here for a second. Now, a ticker that we've already brought up will come back up. OSUR. All right, hold on. Apparently it's the feed. Ah, well, that's a fine howdy do. All right, we'll just have to hang on here for a second. Oh, yes, you are. That's right. Well, Shazbots, what's happening? I don't think that would change anything. I think it's just the feed occasionally gets a hiccup. Right, OSIR. That's right. Here's that one. Just something that we haven't pulled up recently. See that when we pulled up a map. Again, a map. Notice the slow curve that broke us out to the upside. Well. See if commodities come up. If there's crude oil. Oh, I guess we didn't do crude oil. Crude oil looks like it's having a hard time topping out here or getting through the toppy area. That's not even working. G2. Let's see, what is copper doing? Well, we won't even get that because, huh, no, that doesn't work either. I've been doing that. It's just the feed is sometimes slows up. In this case, it's slowing up inordinately longer than normal. Okay, we did that one though. See, anything I haven't pulled up here in the last few minutes, it's already into the system is not coming up. That's what we can do. All right. Hold on, let's shut this down for a second. We'll use these charts. Okay, where were we? Let's see. ERJ. Oh, now we got these things on there. Okay, ERJ. Nice bullish engulfing signal. Back up above the T line. If they trade this positive and get above this level, continue to hold, use the T line as your stop. Yep, we're still here at Cuca Lake, and I don't know why it's acting slow at CQG. All right. HRG. Look at for a positive open on this one. You're going to have that. Notice a little slow curve that popped us out of here. Now you're looking into a J-hook pattern. And OSUR. This one, I was showing this to illustrate. Notice what got this uptrend started. This kicker signal heading up higher. Maybe that was what I had for OSIR. Yes, another one that has gapped up, pulled back, done a little inverted hammer, bullish engulfing signal, pretty much telling us that the selling has stopped. And notice the magnitude of the move. They went from 11 to 25, pulling back, J-hook pattern. This could take you up another 14 points, take you into the 34, 35 range. All right. And we have YONG. YONG. Notice what this did. Gapped up, did a bearish day, and then told you the profit taking's over. This one should be heading up. Now, in this type of market, we also want to be finding good short positions. And notice how this one started with a big bearish belt hold signal closing below the T line. We're still in a downtrend. Now, that may not be something to look at right now. Whoops. But BBRY, notice what this has done. Doji, right up here at the 50, starting to roll over. If this one opens lower tomorrow, you want to be shorting immediately because you're going to have a doji sandwich, which is going to carry you further down below the T line. Good possibility they could bring you all the way back down to the low. And if we make this chart a little bit smaller, whoops, that's not the smaller we want to do. You can see that we're in this downtrend. Now they're starting to slam it a little bit. Yes, could be a blue ice failure, meaning at least this is your first target. Oh, I know. I hadn't put on the 200-day moving average on here yet. JCOM. Notice what they did yesterday or on Friday. They took it up. Now they gapped it down below the previous day's open. If they open this lower, what's it telling us? Number one, it's telling us they're going to move it in the direction of how they opened it after a doji. Number two, looks like they could do a kind of a flutter kicker to the downside, which means they could take you all the way back down to the 45. Oh yeah, down to the 45. Down to 45 at the 50-day moving average. And SUNE, another illustration. When they gap these down, there's still going to be more downside. Anytime you see that candlestick signal, there's our little left-right combo, gap down, there's usually more to the downside. I see IOC, same scenario, doji gap down below the T line. Now, here was a day where you have you weren't quite in the oversold area. You had an up day, not quite a belt hold. I wouldn't really consider this a belt hold unless they got more into the trading range, and then they've taken it down. So don't be overactive on a day that's up in a downtrend unless it does some sort of signal. And YRCW, same scenario here. Gap down, kind of a doji sandwich. It told us there was still going to be more downside. So right now we want to take a look at Zillow. Gap down, kind of a kicker, trend kicker gap down. Where could they take this? All the way back down here to the 50-day moving average. And what was that? That was Zillow. All right. Angie's List. Another one that came right up, failed at the 50, blue ice failure. I should have put the 200 on here. But this one, I was going to put the 200 on here. What is a blue ice failure? Blue ice failure is when they fall through the ice, which in this case would be the 50. They come up and they try to find where they fell through. They can't find it. They drown. We can tell that by what type of signal we have when they get back up to the 50. When they fail, got two targets. First is they're going to test the low. Second is they'll probably go back to the 200-day moving average. Let me take a second here and add something. Let me put on here 200. Red. Flag. Simple. Close. Save. All right, somewhere on here is the 200. So more than likely, this target is now going to be down here to the 200-day moving average. All right, now let's see. RSPT, well, Shazam. That must have been SRPT. Came up, did the kind of the blue ice failure, almost to the 50, did the dark meeting line. Doji sandwich, came right down here to the 200-day moving average. Neon, kind of doing that little rollover right here. I would suspect this has a possibility of coming all the way down to the 200. And UNXL. Notice where this closed today, back below the T line, kind of a failure. You want to short this on weakness. Your stochastics are heading down. They could bring this all the way back down to this level. Give you about a 20% move. And this Barnes & Noble. Notice what this one did. Big down day, bounced off the 200, just moved sideways until it caught up with the 50. And what happened when it got to the 50? Hanging man, doji, all kind of indecisive trading. And then they told us what they were doing when they hit the resistance level. Doji moved down from there through the T line, Now I would suspect that if this is wave 1, wave 3 could take you down in here somewhere, which would probably be around the $10 area. And CENX, Doji, gap down, wave 1. Notice what wave 3, how wave 2 started. This day right here. This day right here, this is why you want to know what your actual parameters are on each signal. This is not a signal. This didn't open below the previous day's open, didn't close above the previous day's close, didn't close below the previous day's open. If this was a signal, we have to assume that the Japanese rice traders, after 400 years, would have identified it for us because they've identified all the other ones for us to say this is not a signal. So if this is not a signal but it's moving up, what should we assume from this? That you might have an up move, but it may not be very powerful. So this tells me right now I'm a wave 1, wave 2, gap down wave 3 on the J hook. Could take me all the way down into the $5 area at this point. So that's the advantage of knowing what a signal looks like and what a non-signal looks like. Here's one that's just rolling over, Herbalife. Where's this have the potential of going to? Back to the 50. And LOGT, bah, humbug. Okay, LOGT. Well, what the heck? Now, who wrote this? Pretty bad when you can't read your own handwriting. JLOQT. Well, shucks butts. Nope, we're not going to look at that one. All right. See what else. We had Tesla. Tesla has moved back up above the T line, doing kind of a little doji sandwich. This one, all you can do is stay long as it stays above the T line. And again, DDD, inverted hammer, if that moves positive, we want to start looking at it. And INFI, bottoming, but I still would buy it only after it closes above the T line. Let's see, we did didn't do ONVO. That one we still recommend. Notice kind of the trend kicker here that started this one off. It's still in a good uptrend. And Vail has moved back right to the T line, which makes this very simple. This has to open higher and trade higher to stay in it tomorrow. If it opens lower, you close it out. You can always buy it back if it comes back up to the T line. Okay, let me see. I guess that's about all I got tonight. And I'm trying to see what we've got here that would be nothing. Everything was soggy. Even, no, everything was soggy. Okay. With that, do we have any questions on candlesticks? Inverted hammers look scary to me. They were up so much and then slipped down. What's the logic behind that? Let's see. Which one was our inverted hammer? Inverted hammer, there's a little one right there. Vail, I'd put a sell stop down below today's low. It needs to open higher. I'd be a little bit further away than that. Close at 15.22, maybe at 15.05 or so, that if it came down that far, it was not heading back up. Oh, Tammy, I don't know what was your question about. But anyways, what were we? We were looking at an inverted hammer. The reason an inverted hammer works is who's happy? The bears are happy, the bears are happy, the bears are happy. Then all of a sudden, oh man, they're nervous. Then they take it down by the end of the day. The bears say, shoot, that was a close one. But then they open up positive the next day. The bears say, shoot, the bulls are here again, get me out of the way. And they start covering short positions and start buying. Okay, deck was an inverted hammer. Yes. So they've taken it up, made the bears nervous. The bears nervous, brought it back down. But right now, what do we have? We've got a support level. We've got a doji inverted hammer type signal, a left-right combo inverted hammer. If it opens positive, that tells the bears the bulls are still here, get out of the way. Do you use ATR? Nope. Or multiples? A multiple for your stops in any way? Nope. I just take a look and say, if I was buying on an inverted hammer tomorrow on a positive open, where should this not close? Well, if this is the candle that told me that the bulls are starting to take control, I don't want to see it close more than halfway down this candle. Number one. Number two, I don't want to see it traded all back below this level, because if this is opening positive, this has an extremely high probability that it's going to go positive, which means if it goes this way, it's broken those probabilities. You want to be right back out of the position. Okay, Tammy, what was your question up here? When is the stock too far away from the T-line to buy? Example, AMAT. When you can see that it's a significant difference in what it normally is. Right now, if I had owned this, I had been watching this because it looked good coming out of the fry pan bottom, and then it got junky. But this is what got you back in, was a slow curve, especially with a doji, close above the highs, and then this breakout. Right now, if I owned this, I'd have my stop back down here, even though I don't think it was going to get there because we're not in the overbought condition. But this is too high now to be buying. The buy was right in here. So you don't want to be chasing stocks, number one, because a good percentage of the move is already gone. You want to be finding ones like this where you can get in where the risk factor is lower and your upside potential is that much greater. Let's see. I often find that information that comes after a pattern has formed, sees that the stock does not perform as intended, and I get stopped out as is announced on Wednesday when you considered, let's see, I missed a sentence here. Stopped out as I am trading out of the session based in Australia. Carolyn, I lost the concept here. Carolyn, email me. We can file Steve at Candlestick Forum. Any update on your class to discuss usage of 3 EMA? Yes. I think September 5th, we're doing a major presentation on the 3 EMA, so we're going to have that information before that. When the stock is too far away, okay, time to buy. All right. Jules asked that when we get to the double line. Any update? Okay. Yes. Yep, got too many things going on at the lake. Like trying to figure out how to get a 55 Mercury from here to Pittsburgh. HP, is it a third deviation, injection, the Bollinger Bands now? Roger, I don't know. I don't follow Bollinger Bands. I use the T-line. The T-line is a much more effective trend analysis. What are your thoughts about holding stock that gapped down overnight and buying more to cost average when the signals and patterns indicate a turnaround? JES, first of all, if it gaps down, the first thing I want to do is get out of the position immediately because I don't know how far down it's going to go. So if you're buying a stock, especially on a kicker signal to the downside, if you're buying a stock that, let me see if I've got my bearish kickers in here somewhere. That's the wrong way. Try to show an example of a kicker signal. There's a kicker signal right here. If I'm thinking it's going this way and the next day they open it lower, below the previous day's open, immediately I'm going to close out the position. Because if this isn't an uptrend, they shouldn't be gapping it down to this level. So to further answer that question, should you cost average it down? No. If you're thinking about cost averaging down, that meant you're in a position that you're in the wrong direction in the first place. First of all, you should be learning when that downtrend started, you should have been out of the position. So you're not cost averaging down, you're out of the position waiting for the bottom. And the waiting for the bottom is, how do we tell when there's a bottom? Because we'll see a candlestick buy signal. That's the whole point of learning the candlestick signals, is so that you're not holding something that's going in the wrong direction. You got out when it was time to get out, and it's time to get back in when it hits bottom. In this flat market, what percentage gain would you expect out of a fry pan bottom? James, as long as you're in a flat market, that means if there's not any severe selling going on, you're still going to get investor sentiment coming in and making a strong move on your fry pan bottoms. What you don't want to see is a severe sell-off. That kind of gets everybody saying, well, I don't need to be buying right now. Tam, I don't know. You just have to look at some of our products and services on the website. I often find the information that comes after a pattern has formed sees the stock does not perform as intended, and I get stopped out as I am trading out of the session based in Australia. What with the FOMC announcement on Wednesday, do you consider this in your trading? No. Remember, the candlestick signals are the accumulative knowledge of everybody buying and selling during a particular time frame. The charts are still going to be moving in the direction of everybody that's made their decision based upon the FOMC announcements coming out. So that's already built into the market. If they're selling off going into the FOMC, that means they suspect something, or they've already built into their trading that they want to be out of the market. If the markets are going up during that time, that means they already have built it in and they expect better things to happen. Not double time yet. Boo-boo. Yeah, I drive it, except it doesn't have a radio. How do you drive a car for 6 hours without a radio? Geesh. With a smartphone. Ha, 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 ha. Okay. All right. Okay, Jim, let's go ahead and do the double line. Whoops. And do the second double line. We're probably not going to get through all of them tonight. Oops, I'm still trying to Do you tend to do worse in August when you go long to minimize this? Do you look for any indexes in NASDAQ on a 10-minute? Good enough. Robert, no. That's don't do any worse or any better in August than any other month. Remember, we're not trying to project what the market's trying to do for this month. We're more interested in what it is doing. So this August, it might be soggy. Next August, it might be a huge bull market. Last August, it might have been a huge bear market. That's why all these general sayings like sell in May and go away, they're general. We can see on our candlestick charts very easily whether people are still buying or not. Tesla continue to own as long as it stays above the T line. Amazon did a doji today in the oversold area. You start looking at this to be a buy as soon as it gets back up above the T line. Apple, as we can see, is still in this same uptrend. Anytime it pulls back, where does it move to? Right back up to the trend. Pulls back, right back up to the trend. This one, all you can do is stay long as it stays above the T line. GMCR, notice that we don't have a reversal signal here. So when it gets back up to the resistance level, I'd be very diligent to see what's going on at that time. Richard, we're probably going to be starting up in, I think it's in September, to do some formulas for TradeStation. IMUC, piercing signal, but I would rather be buying this on a positive open that comes up through the T line. And Mako, inverted hammer. You can be buying this one on a positive open and up tomorrow just based on the percentages. Flowers, Morningstar signal, another one you want to be buying if it opens up and trades above the T line. TNK, stay long as this one stays above the T line, which notice your little inverted hammer, bullish confirmation. NetEase had a good day coming out of this low rounding bottom, gap up. This one's still probably got enough juice in it to break out to this level and go higher. And NVAX, notice the little trend kicker signal that took you out of this resistance level. This one is probably going to be moving higher. This one is a good-looking chart. Vail hit right back on the T line. This one has to open positive and trade positive to stay in it. PBR. PBR doesn't look real healthy. At this point, it looks like you're in a slow trend. I would rather now pay back up here around 15.15 for it, knowing that it broke out to the upside. And PGH, that's backing off. I would think that this is probably going to be a slow downtrend back to the 50. Now, this one also continues to pay a 10% dividend yield, so I'm holding that one for a much longer term time frame. Beat, this one did a doji right on the T line. This is very simple. It's going to move in the direction of how they open it tomorrow. If it opens lower, you close out the position and wait for the next buy signal. SLW, stay with it as long as it stays above the T line or the halfway point of this candle, which might be the same thing tomorrow as far as the T line coming up. MDRX, bullish engulfing, right smack dab on the 50. This one you want to be buying on positive trading and make sure it gets through the T line. Facebook did the little J hook type pattern. This one you can be buying on positive trading. Let's see, what have we got here? Cisco. I think Cisco got whacked the other day. I wouldn't be buying this one until I see some strong signals and looks like the stochastics are still heading down. And Potash, get ready to short this. Notice exactly why we want to watch to see what it does once it comes up to the T line. rolling over. There's still a lot of weakness in this stock. I'd be shorting this one on any weakness tomorrow. Valero, stay short on this one. You can see the rollover. Got up here, doji, gap down. That tells you which way they're going to take it. JP Morgan, stay short. AMRN. Notice that it did not do a signal today. A lot of people say, well, isn't that a dark cloud? Remember, a dark cloud has to open above any of the previous day's trading. You stay long on this one until you see a sell signal and a close below the T line. MWW, trying to base in here, but I would rather see a buy signal and a close back up above the T line before I do anything. INTC, Bidu, what I just typed in here. Oh, Intel, I wouldn't touch this one way or the other. It moves so slow that there's no percentage move in this. Right now, if you're short, you stay short unless it closes back up above the T line. We did NetEase, SPN, bullish engulfing. This one has to get above the T line before going after it. We did Apple wheat. Can't do wheat over here. And OHI. Humbug. JOHI. All the REITs are getting hit. ANGN or AGNC. These can all be sold with the idea that even though they're paying a high dividend yield, they might be something to buy back later. And MTG, stay short until you see a buy signal. CTRP, still in the slow curve to the upside. Doji today. If it opens positive tomorrow, you definitely want to be buying immediately on a positive open. GDX, stay with this as long as it stays above the T line. FCX. This one you should have closed out today with the close below the T line. Now you can possibly go short if it opens weaker, anticipating it'll be heading down to the 50-day moving average. Yeah, to hedge, my feeling is, why do you want to hedge? If you can see something is getting weak and starting down, close it. You can always buy it back. It takes approximately 7 seconds electronically to buy or sell a position. MYGN, ever since we gapped it down from the dark cloud, you stay short until you see a buy signal. And that's also kind of on the same theory that you don't want to cost average down. That means you've been in the wrong position at the wrong time. Close out the position and wait for a buy signal, and then you can buy it. RWT, stay short. NTE's gotten soggy here. It should have been closed out today with the close below the T line. Legend, nothing. I wouldn't be long or short at this point. If I was going to buy this, it has to come up through the T line. And PCYC, little Morningstar signal after an inverted hammer. You can be buying this one on positive trading. We did Tesla, Visa. Visa did a bullish engulfing, but it still has to get up above the T line. And USO looks like it's having a hard time. If this opens lower tomorrow, they're bringing it back down to 36. RAX. Oops, hang on for a second. Somebody's lost. Okay, sorry about that. Okay, I'm going to have to run here in a minute. GGB, stay long as it stays above the T-line. ONXX, stay short. This one you can be shorting aggressively on a lower open tomorrow, anticipating it's going down to 90, which is the 50-day moving average. I'm sorry, the 200-day moving average. And you can be shorting COF also. Notice the shooting star that just touched the 200. They're probably taking it back to the 50. CRPT, this one you can be shorting tomorrow on weakness. Notice it failed the 50. And Ford, if you're trading it, you should be out of it. It's probably coming back down into about the 1480 range. Okay, I'm sorry I have to do this, but I've got to make an emergency run. Take a lot of radio batteries for the transistor. All right, I've got to go. So we'll see everybody tomorrow in the chat room.